As perfectly predicted on Bitcoin, we have got pretty much a perfect bounce on this red trend line, which I did say we would get in my previous YouTube video. Now I'm currently long on Bitcoin right now. Please note that this is merely just it's a dead cat bounce pretty much, okay? Don't expect any new highs from this at all. This is just the next logical area that I forecasted the bulls to begin to get some buy pressure back into it again. It would be very unusual for us to dip down past this line here without some sort of significant buy pressure pushing us back up. You know, it's quite easy to be able to tell these areas as well on the chart, because as you can see here, judging by these candlesticks there, the price struggled a lot to get up past this trend line right here. So the old saying goes, you know, once you get past significant resistance, that significant resistance then turns into significant support. However, don't be fooled, because this is merely a dead cat bounce, and this resistance up here is much stronger than this support down here. So what I'm expecting to happen with Bitcoin is something a bit like that to happen. So I'm looking for at the moment I'm still in a long position, which I will be cutting out, and I'll show you exactly where I'm going to cut out on my long position, and then I'll be switching to shorts. Now the real kill shot for Bitcoin will be a break of this trend line right here. You know, this will be the short of the decade. Soon as Bitcoin breaks from this trend line right here, you know, it's very, very easy to be able to short Bitcoin with stops above it. So I'm forecasting anything, you know, anything below, as soon as it dips below 39k, you know, you'll be very safe for the short with a stop loss at 40k. I'll be quite happy with that, and that's what I'll be doing. Now, where do I expect this long position to reach its terminal destination? Now, quite easily drawing a Fibonacci from the top to the bottom right here, we can see that the 0.618 lines up very nicely with the 44,600 region, which is here. As well as that, you know, we've got very significant area of support and resistance here as well, the historical area, so it lines up very nicely right there. And as well as that, we've also got this very significant trend line right here, which I've already drawn on in red. So at the moment we're consolidating underneath this trend line right here, and then I'm expecting us to break out of here, retest it, and then eventually move up to the 44k region before then resuming its trend back down. Now, it is quite evident here that we are in a zone of distribution. Now, what I mean by a zone of distribution is merely just an area. So as I was saying, it's very clear that we are in a period of distribution right here. Now, what distribution means is that these big players, these whales in the market, are indeed giving the illusion that Bitcoin is massively bullish and we're going to go to new highs, when in fact that isn't the truth. And what is happening right here right now is that they are selling at these peaks to retail who are willing to buy. Now, it's a fine balancing act, because what these large players in the market have to do is keep the illusion that Bitcoin is bullish. Okay, if they get too aggressive with their selling, and they were quite aggressive here, retail traders can get quite bearish. And what they don't want happening is sentiment flipping completely the other way, which then makes it hard for them to sell their Bitcoin at a reasonable level and a reasonable price level that they're happy with selling. So what they do is they often drive the price back up to these areas here, make retail FOMO in again, make retail think, well, we're going to 100k here, you know, we're on the all-time highs, so that then they can offload again and sell. So you'll never see the chart going straight down, and you'll also never see, you know, these periods of massive sell-off without some significant retracement, bullish retracements as well in the distribution. So what I am predicting here is indeed the market maker is going to bring back some bullish sentiment into the market, which they've already done. You know, this is quite a big candle. In the space of 3 days, we've pushed up nearly 4,000 or Bitcoin, which is enough to make a lot of people FOMO in. And certainly the push up to these levels here, the 44k region, is going to make even more of them be able to FOMO in. Now, what's interesting now is that we've just also got the alert that the US government also plan on selling their Silk Road Bitcoins. Now, the government are going to have fantastic analysts amongst them. They're going to have some of the best people, giving them advice, and they are no fools. They're not going to be selling at random times. I don't think it's any coincidence that they are suddenly giving notice to sell in this region right here. And I think what's going to happen is we're going to see those Silk Road coins get sold off by the government, or at least a portion of them at this level up here. And I think that there's a reason for that. Obviously, my justification for it is I think this is the top on Bitcoin. I think the 49k was indeed the highest that Bitcoin will go for the foreseeable 12-18 months. And I think there's going to be a massive crash. I think this was a bear market rally, and I think that they are distributing on retail right now. So I'm currently in a long position. As I said, I was in a long position from about 39k down here, which I gave precisely on this trend line. So I had already had my limit set in this region. I knew it was going to be very good resistance, very good support. So I'm aiming now for one move back up, a dead cat bounce towards the 44k region before we then start to crash back down. Now, the 44k region is where I am most hopeful for doing that. However, it's important to realize as well that we perhaps don't even need to go that high. You've got the 0.5 level fib, so maybe 43, 461 level might even suffice. We've also got some other trend lines dotted about here, which line up quite nicely as well. But personally, I think the 44,500 region is where we are headed. However, just make aware and make a mental note of yourself, and perhaps draw these trend lines up here, that if price is really struggling to break the 43,500 region, that perhaps this might even be the top, and we might not even go as high as that. So I'll be looking quite precisely at these levels, and I'll be watching the charts quite closely just to see how Bitcoin progresses and see where we go. Now, another thing that I wanted to give my analysis on was someone posted on Twitter the other day that they thought treasury yields are going to crash imminently and quite soon, and I don't know where on earth they're getting this viewpoint from. So I charted the 10-year yield myself, and I came up with this. I think it's quite the problem with most people, okay, is that they simply don't go back far enough on the chart, and they simply just try and make these small time frame biases fit their narrative. Thankfully I'm one of those people where I will take the time to go back to the very beginning of the chart from when it first started, if I have to make sense of what is happening and what is going to happen in the future. And what I found from this is that the 10-year yield has been playing out in this large parallel channel. We had a rejection just here, it came back down, and then it broke through. Now what's happening is that it's now retested the top of this large part of the upper channel, this orange trend line right here. Perfect bullish retest. We also had a perfect bullish retest on this red trend line right here, and now we've began the move up, and using also a little bit of fib there to there. I don't think it's any coincidence that we're aiming somewhere up in this region by the end of the year. I think that we are definitely going to be reaching the 6 to 7 yield price on the 10-year treasury yields. and I think it's obviously very bullish. I don't know why anybody has thought any different. And the thing about the Treasury bills, which relates to Bitcoin a little bit and crypto, is that it has a very large confluence with the value of the US dollar. So obviously when the US dollar goes up, Treasury bills are going to yield more, and so often they have a very positive correlation. Now, my analysis on the DXY, which I showed you previously, which I'm very bullish on, perfectly correlates with the 10-year yield. You know, if I think the DXY and the 10-year yield are both going to go up, and they're going to make massive gains this year, which again fits my bias and my theory that Bitcoin has reached a top and is going to collapse this year. And another one as well, which I think was quite cool to do, was crude oil. I'm a very big bull on crude oil. I'll turn that into the regular chart. There we go. So I'm a very big bull on crude oil, and we've had a nice breakout right here, and currently I'm targeting the 105 and above region. I think it's going to be going up quite a lot. Now, what causes this? I'm not sure. Potentially it's war, lack of supply. Something is going to happen, but I don't quite know. But what is interesting is that, which I found, is that nearly every single recession that has occurred in the US, preceding it, oil prices have massively increased just before this recession occurs. So obviously I'm expecting a financial bust to occur this year at some point, and it makes sense now that oil has broken out this trend line, and I think it's going to have a pretty mega rally all the way up to 105 and above, to be quite frank. Now, overall, it's important to just remember that anything that Bitcoin does in a bullish sense here is simply just a dead cat bounce. That I'm very certain of. We might end up filling this wick here at 46k at the very most. What I am positive on is that 49k is the top. I'm expecting something like that. A few bounces along the way, and then something like that. That's what I am expecting, and then they're there with that trend line, linking those two up. Something a bit like that, And what ends up being is indeed a megaphone pattern, and then I'd expect something like that to happen, something like that, And then that's when the bull market starts, and we break out of this pattern and then go up. So overall, I am bullish in the long term on it. I just think that people are horrifically wrong, and this blow off top is not going to occur, in stocks, and it's not going to occur in Bitcoin at the moment. I think we have reached the local top here for the next 12 to 18 months, and I think when we go down after that, I'm majorly bullish. I think I'm massively bullish, and I think this ETF is, it's very funny how this ETF news and approval marked the top as well. I think this ETF news was indeed created as perhaps an artificial way to pump Bitcoin to an area where these elites and these market makers and the big boys in crypto were happy to cash out of. The people that held that accumulated their bags were down at the 16k region down here. They've got a 250% increase, which is very nice. Thank you very much. Yes, we're well over 220% increase in their bags, which is very nice. So I think that they needed to generate some sort of FOMO and some sort of artificial news piece to be able to pump crypto to up here. And it begs the question as well, like, why are these ETFs suddenly coming in now? Like, why are they so hell bent on coming in now? Why weren't they coming in, and during the crypto bull runs of, the 2020 and 2021s? Why are they deciding to come in now? Now, my long-term projection on these ETFs is, yes, they probably do want to come into the space, all these BlackRocks and Vanguards and everything like that. However, I don't think they're going to want to come in here. What I think their plan was was to completely destroy the sentiment of the retail traders. And, you know, even after these ETFs are approved and even after the halving, which is happening in March, April, Bitcoin still crashes. You know, it seems like the halving is one of these 10 commandments that retail traders have. You know, the halving always makes Bitcoin go up. The start of the bull runs is, you know, straight after the halving and all this. And I think to destroy the will of retail, you have to destroy everything that they hold dear to them. And that is, you know, their idea that the halving is bullish and their idea that these ETFs are bullish as well. I think that this is the ultimate trap. You know, I think Bitcoin is going to dump down for the next 18 months. People are going to get very scared. They're all going to be screaming and shouting, you know, crypto's dead, you know, the ETFs didn't work, the halving didn't work, what else have we got left? And then down here, sometime in 2025, you know, that's perhaps maybe not at that level, but somewhere around here, you know, obviously that's negative, it's just a very rough drawing, but somewhere around there, at these very lows, then these massive hedge funds are going to come in and swoop in a large proportion of BTC. And what we'll probably see is a large candle here, a huge, people are crying down here that crypto is dead, and then all of a sudden we see a very large candle. So a huge candlestick, something like that is going to happen. And then what I think is going to happen is everyone's going to FOMO back in, and then the bull run starts.